Good evening, all. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 18th of May. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals, right? I did a post on Friday afternoon where I was talking about the high probability of seeing a consolidation or a retracement over the next couple of weeks. Now, I think that's got a I'm not expecting to see a huge retracement. I'm not really expecting to even see a large retracement, but I am expecting to see some sideways action and some downside action as well. We're seeing a bit of that at the moment, or at least we were seeing it after the close on Friday with the downgrade from Moody's. Personally, I didn't think that was big news. The other two big agencies downgraded US debt from AAA, a couple of years ago. But I think it's certainly not good mood music with the bill going through Congress at the moment, which may not go through because, of course, it's going to increase the deficit, which is more or less the last thing America needs at the moment. So we will see how that goes. But I'm thinking, what I was saying was that I'm expecting to see a retest of the all-time highs, but I'm expecting to see a period of retracement or consolidation first. I explained why in the post, so I suggest you read that. In the short term, we don't have any negative divergence on ES or on NQ or on RTY. We do have, they're small, but we've got what could be a topping area here setting up. Not really good enough to be called a double top. Got a small double top on NQ. Never quite made it to the retest of the high, so not a good double top on RTY, and a pretty decent looking double top on YM. I'm thinking that one or more of these may play out over the next week, and we'll see how that goes. Looking at DAX, didn't quite do the high retest, and we did do the high retest on ACX, but not in a way which really formed a usable double top. There's nothing really saying that we see a sizable reversal here. I'm just thinking, sideways to down trading, and we're likely to see that. I think historically, and I was demonstrating why in the post on Friday. All right, let's have a look at the bigger picture charts. Okay, looking at the daily charts, no current divergence. What I was talking about for the rationale for the retracement was hitting the 90 level on the daily RSI 5. There's a history on this. I only went back about 3 years on it, but nonetheless, there is decent history on it, and it has been pretty reliably followed by some consolidation. And I'm seeing on crypto a setup which is again looking for consolidation straight retracement, and I'm thinking we're likely to see that over the next couple of weeks at the same time. In terms of pattern setups here, I'm not really seeing anything here saying what I was saying was that in the event that we were near a close, I'd be expecting to see some decent patterns from the low, and I'm not. So I'm leaning towards going higher. I think the obvious next target would be a retest of the high, and I'm thinking after a consolidation, we likely go and do that. Maybe we'll have a setup for a turn there, and maybe we won't. We will have to see. In terms of the hourly charts, I've got a possible RSI 5 14 sell signal brewing. We almost lost it on Friday, and it could be that we're going to lose it tomorrow. If we go up at all tomorrow, then we could lose it. But if we start off where we closed on Friday, then, or at least where ES closed on Friday, and then after the Moody's downgrade, then there's a decent chance that's going to fix. And we've already got a fixed one on NDX, on Qs rather, where we already had that on Friday. In terms of the pattern there, again, it doesn't look complete. I've not got decent trend lines here. I've got no sort of a decent pattern here. On Dyer, we've now got a possible RSI 5 sell signal brewing, and a decent looking one. Nothing on the hourly, nothing on the 15-minute. Again, these are not decent patterns. We need to do some, there will need to be some more work done and a retracement done before we're going to get any decent patterns. All right, let's have a look at the IWM chart. And on the daily chart, we've got a possible weak RSI 5 sell signal brewing there too. Hourly chart, we've got a possible RSI 14 sell signal brewing now. So we've got some decent negative divergence here. Possible RSI 14 sell signal in 15 minutes as well. This could be a little level top. It would only be for a modest retracement, but that's all I think we're likely to see here. So I'm not really looking beyond that. And actually, the obvious target I would be looking for, and I mentioned it before, would be the 200 MA on SPX. So I've got that in the 57.59 area. We need to drop 200 handles from the from where we closed on Friday on the RTH charts, and that might be a stretch, but that would be the ideal target to get back to. We shall see. All right, great. Let's have a look at DAX, where we have gone higher. We've got a possible weak RSI 5 sell signal brewing, and pretty close to a double top there, but would need to go a little higher first. Nikkei, we've been back testing and we're back below the 200 DMA, but I'm still reckoning this will probably have another leg higher. This might do a retest of this high here at 42.4. We shall see. All right, let's have a look at the DX chart. Now, DX, we hit this trend line here and we paused for a few days from there. I'm thinking we might have another crack at that trend line. But let's go to ZB first. ZB, we're almost back at the lows. Now, remember, these lows were made when there was a big sell-off in treasuries over the tariffs, and we've almost got back to that retest. I'm expecting it to continue down. I'll explain why on the bigger picture charts, as I've been doing pretty much every week recently. In terms of the bigger picture US dollar chart, I would note this very nice looking bull flag, and I put in this trend line here quite a while before it was reached. After we did this turn at 110.18 as the ideal flag support trend line, and we hit it. Now that is something to think about, because this is a decent looking bull flag, and of course bull flags generally break up. We could see that. I've seen some people arguing that the natural thing for tariffs happen with tariffs first is for the dollar to go up. We're not really seeing a great deal of that so far, but that may well be the case. If that's the case, then the obvious setup would be a retest of 114.78 and then a fail not too long afterwards. We could, of course, break down. 30% of flags break in the opposite direction they're supposed to, and we could see that here. Looking at the weekly chart, no divergence. Made the sell signal target on the way down. This is the flag. It's nice. So we will see. Let's have a quick look at the other ones here. We've got a pretty decent looking bear flag on Euro, which isn't quite a full match, but is a pretty decent match with the one on DX. This would normally break down into a retest of this low, and obviously we might see that. We will see. Not a great deal else to see on the others. GBP USD, we've got a possible level top here, but on the bigger picture, not so much. Well, this is a falling wedge which has broken up. It's a bullish leaning overall setup here. Obviously, we broke up through these highs here on Euro. Euro, again, we've got a big falling wedge which has broken up, but there's nothing to say. I mean, it would be entirely routine in a bottoming process to go back and retest the low, and we may well see that. Looking at USD JPY, nice looking rising megaphone. Next obvious target would be megaphone support. But obviously, if the dollar's going to go up, then this might go up with it. We would see. In which case, we could, I would note, be forming a huge inverted shoulders here, and we could be on the right shoulder at the moment. Looking at USD CAD, nice looking double top. May well break down. We will see. Not a lot to say on Australia or Australian dollar or NZ. Not much of a pattern really happening on Australian dollar. NZ, not a huge amount happening there too. Pull back to the weekly charts, and there's really not a lot happening on NZ. But Australian dollar clarifies because we've got another falling wedge there. But here, this one hasn't broken up yet, so I'll be waiting to see if that does. All right. Let's have a look at TNX. Now, obviously, on the bigger picture, I'm looking at these potential inverted head and shoulders forming on TNX and TYX. In the event that we see a bonds crisis this year, and I think the more I look at the, well, I mean, I think in terms of everything that's happening here, in terms of the tariffs, in terms of trying to talk the dollar down, in terms of trying to put past tax increases, tax cuts, which are going to increase the deficit. I'm really, really thinking that there's a decent chance we're going to see a bonds crisis in the US sometime over the next year, possibly into next year. We shall see. In terms of the weekly chart, nice looking rising channel here. That's nice support. The next obvious move is up, and the next obvious big move would be up to 49.97. That could be a level top, but again, that could be the springboard to break up. In terms of the daily chart, no current divergence. Hourly chart, no current divergence either. We do have an IHS which has broken up with the target in the 45.8 to 46.3 area, and I think there's a pretty good chance it's going to be making that target, and it may well be making that target pretty shortly. In fact, hang on, wait a second. Okay, right. Okay, let's have a look at CL. Okay, CL, we've got a breakup here. Now, I've got a couple of, I would say that on the HO chart, this bear flag that I'm thinking might be forming here kind of looks formed already. That too has an IHS which hasn't made target yet. I've got the target here, having rolled this into July in the 64.5 area. We'll see. I've got the ideal flag resistance trend line would be in the 66 area. That's obviously some distance away still, $4, but I think it's got a shot at making it. We will see. All right, looking at NG. I think this is breaking down with a target. Well, it's already broken down with the double top target in the 3 area, and I think it's got a pretty good chance of making it. And this looks like a bear flag, and this looks like a setup to take it back to the lows, and that's where the target is for a bear flag. So that would be a retest of the low, and I think very possibly continuation lower. We'll see. All right, let's have a look at the bigger picture chart on those. Looking at oil, we've got declining resistance a long way above, up in about the 73 area. But really, I'm thinking this could go an awful lot lower. I do think where chances are that the US is in recession. I think everything we've seen so far this year is likely to be slowing down the economy. The consumer sentiment numbers are awful. We will see. But I mean, if the economy is slowing, and I think it's very likely that it is, then that's not likely to be good for energy. And with the Saudis opening the spigots, and it's not a good prospect. So I think we're in a counter trend bounce at the moment. How far that goes, I don't know. But with the RSI 5 buy signal, sorry, I haven't marked this up, but the RSI 5 buy signal has reached target. I do have a possible case for reaching this trend line, but it's purely a trend line case, and it doesn't really seem particularly likely on the basis of everything else that's happening. Looking at natural gas, we have this lovely bottoming setup looking for 5.75. I'm very skeptical about it making it. At the moment, we seem to be coming back into this low, and we'll see. But I think if it does come back into this low, then it could go a lot lower. On the bigger picture, I think the next big trend line support would be in the 2.3 area, and that might well be next. We shall see. No current divergence. We made the sell signal on that at this high, and I did call this, I called this resistance was likely to be in the 3.72 to 3.93 area, and it fell at 3.82. So midway between the two. That was a good level to fail at. So all right, let's have a look at GC. GC, now I think this is a bull flag forming here, but I am wondering if it might go deeper. Now, if it was to hit this trend line, which is a pretty good trend line, we've got 1, 2, 3 touches on it, then that would take us down to the 3100 area. I'm not really expecting to see any lower on silver. We've got a very nice falling wedge here right now. But we could come back and retest the lows, possibly do a little bullish underthrow. In terms of palladium, we had a double top here. It doesn't look as though it's going to make target, but it doesn't need to reject back up to the high yet. Possibly it could still make it, and this is an A, B, C down. Looking at platinum, nice looking level top, showing absolutely no sign of breaking down. And copper, we've got a falling wedge here, which is trying to break up, and it looks like a little bull flag forming here. So I'm leaning towards this doing at least some more damage to the upside, but we'll see. Obviously, it doesn't have to. We'll see. And actually, if we got back to this trendline support, which I've got in the 4.43 area, then that would just be, this move would just be making the wedge larger. All right, let's have a look at those on the bigger picture charts. And gold. Gold, I was looking for a bull flag forming here, and I think what we've got is a flag, and it's quite a decent one, and it could go a bit lower before it bottoms out. No current divergences. Silver, I've got a lovely little, a lovely big bull flag here, and the smaller one on the 60-minute chart is here. So we've got a bull flag within a larger bull flag. Next obvious target is this this trend line here in the 34.4 area, sorry, 34.5 area, and on the bigger picture, I'm wondering about a move possibly into the 38 area, which is also a match with this trend line here on the monthly chart. Looking at palladium, I'm still wondering whether we might possibly see a retest of this low here at 808. We are not close to doing that at the moment, though, so I'm not seeing anything currently suggesting that we're about to do that. But we'll see. It would have been nice if we had done it, maybe. Looking at platinum, we've been in a 3-year consolidation, and we're still on it. Looking at the daily chart, no signals. We're right in the middle of it. We're compressing. We shall see. All right, looking at copper. Copper, I think this is a double top, and I think as and when we finish this little rally here, we're probably going to come down and test this support here in the 3.75 area. As I said, as I've said before, copper doesn't tend to do well in periods of declining demand either. Same with lumber. No divergence on the daily chart, but I'm liking the downside. I was warning when we got up here that there was probably the second higher double top, and I've not seen anything to change that opinion since. Looking at GDX, I am wondering whether this might go lower and hit this trend line here in the 43 area. The corresponding trend line on GDX is a bit lower comparatively, and I've got that in about the 52.5 area at the moment. In terms of the hourly charts, no divergence. We had little buy signals at the lows, at these last lows, but they've already made target. So I am wondering whether we'll make the lower trend lines, but that looks like a stretch on GDXJ, and it's probably mess up the nice looking flag there is at the moment. Maybe on GDX directly though. We shall see. All right, let's have a look at. We've done currencies. This looks like a short term. This kind of looks like a bull flag forming on the euro. Very much looks like a bull flag forming on GBP, and this looks like a head and shoulders forming within a rising megaphone here. There is a fair amount here suggesting that the dollar's next move will be down. Somewhat. Doesn't need to last that long, but likely it is. We're going to see some downside. Nothing really to say on the others. Looking at KC. KC, we've got a nice looking little falling wedge here, and it is nice. I think this is a bull flag. I think it will break up, and we've got a part formed IHS, and if we broke up directly from here, a sustained break over this resistance here in the 379 area would get us up into almost the 400 area and a shot, well, 395 area, and a shot at getting back at that high. Looking at sugar, I'm still wondering about a breakdown here, and this could be an IHS forming though. So watching that. The ideal right shoulder low would be in about the 17.3 area. Looking at cocoa. Cocoa is heading up towards the target in the 11,250 area, and it's almost made it. So that's up here. Nice move up there. I was wondering whether it would manage. We've been hanging around for a while. Looking at cotton, down below and has backtested the monthly pivot as resistance, can go lower, although I would say this is a nice looking little level bottom here. But it could be, so it could be that will play out. But if it doesn't, then we've opened lower targets and we may well go to them. Looking at lumber, nice little rally here, still leaning lower on the bigger picture. ZW, we've got this little falling megaphone here, which is broken up within this larger falling wedge, which may well be looking at breaking up too. We shall see. On the I've got a much larger falling wedge though that's broken up. I'm looking at that on the weekly chart, but I'll come to that. On corn, possible bottoming action. Looks like it needs another retest of the low. Soy, rising wedge, which is breaking down. I wouldn't be surprised to see it go a little higher. I'll explain why on the bigger picture charts, but I'm a little surprised it's got as far as it has, really, given the tariff stuff and everything's going on at the moment. Soy is a little vulnerable to that. Live cattle, we've got a rising wedge here, which is broken down. Probably might top out here. This could be a part-formed head and shoulders, and I'm leaning towards seeing a bit more retracement. Looking at lean hogs, got another possible rising wedge here, which is pretty nice. We've just hit wedge resistance, and I'd be looking for a test of wedge support, which is currently in the 101.3 area, but we could, of course, just trade sideways into that. All right, let's have a look at the bigger picture charts on that. Okay, coffee. Coffee, we've got a bull flag here. I am wondering about a test of 4.41. By historical standards, though, we are at nosebleed levels. So we'll see. But it's a definite maybe. Looking at sugar, we have this apocalyptic head and shoulders, which is trying to break down. It may well not manage. If it does, though, it could take sugar down a long way. So I'm wary about that. On cocoa, we had some buy signals. They all made target. RSI 5. Nope. We had an RSI 14 one left. It's so that's all delivered now. Doesn't necessarily have to go higher, but we've got a nice looking double bottom on the front month. Doesn't show up as well here, but it's it looks pretty nice, and I'm expecting to see 11,250, and it may well continue higher from there. RSI 5 is getting to a pretty high level, but we've seen some pretty strong moves on cocoa over the last couple of years. Looking at wheat, big falling wedge here. I have suggested that this might be in a bottoming move. And that's because we've got a wedge, it's broken up, we're retesting the low. This is something you often see at lows. I have been told that that there's too much capacity for corn and wheat. But what I would say against that is that it's not a bad looking technical setup, and you quite often find that people are pretty negative about the idea that prices might go up at lows. And given that we're at multi-year lows now, well, I'm just throwing it out there. It's but obviously, you know, that might be right. If there's really too much capacity, then obviously that's going to be a problem for it going up. In terms of corn, got another falling wedge, and it's nice. This looks like a bear flag setting up a retest of this low, though. Looking at soybeans, bigger falling wedge there. It hasn't actually broken down yet. Looks like a little flag within the wedge, and we almost made the resistance trend line, but not quite. I'm wondering about a retest and possibly just getting up there till about the 108.4 area. Doesn't necessarily need to, but it does look. No, it really doesn't need to. Next obvious, it never quite reached this low either. But overall, this looks like a bear flag line. I'm wondering whether it's going to take it down. On cotton, another falling wedge. Again, this one hasn't broken up yet, but sooner or later, it probably will. On lumber, this looks like a bear flag forming. Not clear where the resistance trend line is, though. I've got like too many options. And it's not easy to pick one. It may be that we'll go up a bit higher to establish that. Otherwise, I'm leaning towards the short side. All right, great. In that case, I think it's a wrap. So I will catch you guys again on Wednesday. Cheers.